I think what a lot of people build very complicated structures for the sake of building very complicated structures.
Cloud providers have an incentive to package and show you a version of AI which is right for them.
In a blockchain space, every other day is a new project.
Every other day is a dead project.
But that's also innovation.
So welcome to the Financial Coconut Podcast. I'm your host, Reggie, aka your Chief Financial Coconut. And today I have a very interesting panel together with me to talk about innovation in finance, right? All the fintech good stuff lah. So maybe we go one round just to warm up for the guests. Who are you? Get to know you a little bit better. Yeah.
Hi, I'm Varun. I'm founder of Fintech Nation. It's a development institution. We invest in early stage companies. We wrote a few books with the brand Fintech Nation. I'm a founder of Singapore's Fintech Association as well. So I've seen the journey over the last 15 years from before it was called Fintech, or how Singapore became a Fintech hub, the goods, bads, ugly of how Singapore makes Fintech work.
So before it was called Fintech, what was it called?
The premise is we coined the term Fintech Nation because the government had the word smart nation and there were too many countries who call themselves nation. And interestingly, Hong Kong could never call itself Fintech Nation because they will have a lot of problem with the word nation.
So you just grabbed it. You're like, I'm going to call myself Fintech.
That's a start.
I could use Fintech state or city and there will be a competition.
Yeah.
For me to say nation would be like game over. They can't contest anymore.
Okay.
And London could not compete with that either. And New York could not compete with that either.
Yeah.
So Premise was like, set up that. And we created like a series of further downstream. So we have a further brand called Fintech 65. So we recognize 65 people across different categories every year because that's the year of independence and the country code.
Yeah.
So every country will have 50, 100. Nobody will come after 65 and nobody can come like left, right, center and you own the name and you just anchor that along with that.
So yes, so that's Varun. You want to introduce yourself?
So my name is Yam Kee. I am the Vice President for Asia for Circle. We are a fintech company with the regional headquarters here in Singapore, and we issue a stablecoin called USDC. I really play in the space, the intersection of international finance, technology, and policy. So aside from Circle or before Circle, I spent some time at Google on the payments area, in the cloud area, as well as in Google Hong Kong. And before Google, I worked in the US government for a number of years, essentially a financial diplomat.
Nice. Okay, cool. And
Hi, everyone. My name's Ed. I co-founded a startup here called Art of Finance. We're trying to bring private banking to as many people as we can and kind of take a fresh and modern take on it. And before that, I also worked at Google for a long time. I was a product manager and I ran the product team here for the Google Pay consumer app.
Okay, great. So we got a great panel together. Maybe for a start, just to kind of lay the ground for our audience, right? You take a jab at it. How has fintech changed the offering in the market, right? Across the board, right? Whether is it insurance, whether is it trading, investing, wealth management. I think a lot of the old institutions, the banks, the brokers, they feel the bite, the pinch, right? So how has it changed the product offering over the past few decades?
One of the key things which has changed is there has been a democratization of access because what has happened with cloud, with APIs, the same solution. So for example, mutual funds. Now, literally any startup could come up and buy the infrastructure of a Saxo or a iFast or an interactive broker and put up the exact and probably a better catalog than most of the banks because banks would take 3 months to approve any new fund to be listed on the platform. Because if you look at financial services, there are broadly like 4 things. You have technology, which is commoditized, regulation, where if you are going after a part of the financial services value chain, if it's distribution of mutual funds, insurance, payment products, just the distribution, it's a solvable problem separately. Trust is where consumers spend more time with their internet brands than their financial services brands.
It's true.
And for short-term products, it's okay. For those products where you need 30-year commitment, they will still go back towards the traditional. So your credit card, your relationship with your credit card is monthly. Your next month, you can have a next credit card. But for example, life insurance is probably much longer relationship.
Yeah.
Your mutual fund, you can sweep in from A to B to C. Your relationship is not even monthly, it's weekly. So that's the trust part of this. So if you look at trust, technology and regulatory. So these are the parts. So fintechs have able to, make it even more competitive from that. And that works also in the other way. The larger banks become a lot more powerful. So because they can suddenly, the larger becomes more larger. So one side you see disruption, but other side you also see concentration. So How many banks today have their own dedicated QR code app? Only one. There used to be a lot more 3 years ago, 4 years ago. Now there is only one. There is a concentration in the incumbent world also. There is disruption on one. So the challenge from the fintechs is actually to the smaller financial institutions, not the largest ones. They are the one who get hit first. So I would say, used to use an American analogy, the technology now empowers the challengers to fight with the weaker incumbents, not with the stronger incumbents.
Okay. Fair. Yeah.
I would say that in a way, a lot has changed.
You guys changed a lot.
But in other ways, nothing has changed at all.
Right? Oh, okay.
Because if you look at the region, and Asia is really special here, where the governments really started transforming the fundamental payment infrastructure, right? So you look at India, that the UPI, and then, of course, Singapore with Pay Now, Prompt Pay in Thailand, and all these places. This is quite innovative. If you were to ask somebody, 10 years ago if that was possible, they would not. Even 5 years ago, they didn't think it was possible. But it is now, and it is standard, and it's moving money easier within these jurisdictions. But the challenge is that what I say when things haven't changed is that money is still stuck in these networks, and we have walled gardens of different financial apps, so that money that is sitting in a Grab wallet is separate from money that sits in a PayPal wallet, and it's separate money from money sitting in a Gojek wallet, and it's separate money from your FavePay wallet. So you as a consumer, in a way, you have a lot more options, but in other ways, the way of getting things done is still fairly complicated. You got to figure out where do I want to go, what do I want to buy, do I have enough money there? And this is just domestic, and then there's international, and doing anything international is super expensive and complicated. I mean, just last night, I spent, I think, 40 minutes on a phone call with Marcus Goldman Sachs, which is a consumer-facing app. They had paused my account because I was logging in from out of the country. And they said, therefore you can't move money out. So I wasn't able to pay my credit card bills and other things. And I'm like, this is kind of important. So in that way, nothing has really changed. We're still stuck in the same operating experience in Rails. And what I'm looking forward is really the next phase of fintech. So look at us, fintech 2.0, where the fundamental Rails have changed, where we're on blockchains, where things are interoperable, where the ownership of the assets really belongs to the user and not the intermediary that holds it. I think that would be a whole new way of transacting, and I think it opens a lot more of opportunities.
Yeah, but there are a lot of problems with that system, right? I mean, we really see it kind of playing out with things like it's not efficient in terms of what it's doing. That's why intermediaries you kind of stand. And in some ways, you guys are some form of intermediary, right? So kind of help us understand your thought process around there.
Yeah, I think it is right that the experience on Web3 hasn't been that smooth.
Yeah. So like the gung-ho guys, they're already on it.
Absolutely.
Right? But everyone else is like, do I really want to do this?
Yeah, and I was explaining this to my father-in-law.
Best guy to explain to.
Well, you're in trouble, when your father-in-law is like, what do you really do? So I describe what I do, and part of what we're doing is not only on building the digital dollar on the internet, but also helping businesses develop and build their digital wallets. So a Web3 wallet that's tied to the blockchain that allows you to transact on this new rail. Grab is one of those where they're using our Web3 technology for the wallet in their app. I described that you need more of this for people to interact and for merchants to interact with users. And that's not quite there yet, and it'll take time. And he kind of looked at me and said, this is not too dissimilar. When he was in the 90s as a business person, he immigrated to Canada, his brother running the other part of the business sat in Hong Kong. And he told his brother, get a modem. And his brother said, why? He says, so I can call you and it won't cost me hundreds of dollars to have a phone call, right? Nowadays, we think of this as pretty normal. But back then, you needed all of these connectivity points to be able to connect with one another, to just simply have a phone call, to have emails, and then eventually for video conferencing. And the Web3 experience is like that. We're at the dial-up stage of Web3, but that's not static. We are moving into the broadband stage where more people will have Web3 digital wallets. It'll be embedded in their apps. And then they'll be able to transact in different type of non-fungible tokens or fungible tokens in a more interoperable ecosystem.
Without even knowing that they're on Web3.
It actually should completely disappear. The same way that when you go and tap at a merchant, you're not thinking, are they running this on Oracle or Microsoft? You don't care.
Yeah.
I just want it to
I
tap
just
and
want
it'll
to
work.
complete it. Yes.
Exactly.
I think what I usually spend my time on is a little bit different, which is I just want you to have a better experience when you're interacting with money.
Exactly.
Right? Like that's all I really care about, right? And I think like if you think about the many years I spent at Google building all these consumer products, at the end of the day, you open up your phone, the way you interact with everything is different, right? You interact with music differently, you interact with like the way you control your house is different. Money feels like you're interacting with something that was made hundreds of years ago, right? Like I spent a lot of time trying to make consumer payments better. And now I think the next interesting problem is to go after like this like mystical world of private banking that's all locked up and like you don't really know what's happening there. It doesn't really need to be that way. What's underneath the hood? I kind of agree, like doesn't really matter, but you're going to open up your phone. You're going to have your primary relationship with an app that's on your phone and you should feel like you're in control, like that you are actually the person and everything else is your assistant that's helping you do all these things, right?
Fair. So maybe I can open up the floor, like what do you think is the next round of innovation? Like what are the interesting products or what are the frontiers that we're going with to bring finance to the next level?
We're working really hard on Arta and launching Arta in Singapore soon. But if you look in the Arta app now in the US, one of the things you'll see is there's no graphs. There's only one number on the home screen. It's not like a graph with lots and lots of numbers of red and green all over the place and a big graph on top, right? Like at the end of the day, I think you don't want to interact with money that way. And so one way I think like technology and fintechs can kind of bring this forward is make money much more accessible and talk about money the way you would talk about anything else in your life. The other thing I think is really cool is just like all the really cool stuff that's happening in AI land, right? But in AI land, there's lots of like high and mighty. But at the end of the day, I think what AI is doing is taking stuff that used to need a lot of people and changing it into something that you can like run for yourself. For instance, if you had a banker, you can once in a while WhatsApp that person and say, how's my portfolio doing? Make me a report. There's a limit to how many of those reports you're going to get because somebody's going to sit there and make that report for you, right? But actually having an LLM generate these reports for you is very easy. And I think putting that superpower in everyone's pocket is quite magical.
Okay, I want to dig into the AI land, right?
Yeah.
Because AI is like talk of the town, right? Everything also AI. Every problem AI also can solve.
AI nation.
Yeah. Okay, AI nation. But on that front, it's a bit problematic in my point of view because AI at the working professional level with finance guys are just kind of like working companions. But when it's being flushed down to the retail individual, it sounds like this can make you money, right?
And it shouldn't be like that. Yeah.
So what is the truth? What can AI really do for us, the working professional?
I think what AI does is really give everyone that same superpower, which it feels like you have an assistant. The really interesting thing about AI is for the longest time, computers had to give you the right answer. Like the whole point of a computer was to do math and give you the right answer, right? If anyone's watched Enigma about Alan Turing and like basically like breaking the Enigma code.
Oh, yeah.
And for the first time, you have ChatGPT in your pocket and sometimes it's wrong. And we're all trying to figure out what it means when sometimes your computer is wrong. And so I think that the really cool thing about AI for everybody is that suddenly everyone really does have this like superpower where it's like you have a question and someone can do work for you. And that's what like very fancy finance people use AI for. And I think opening that up to as many people as possible is very cool, right? Like I think that's what we should do with it.
What I like about this panel is that we come at this at different points of view.
Yeah.
And what Ed and Arthur is building is the user experience of people with finance. And he has an expertise in this, having obviously been at one of the most successful consumer companies in the world and has a point of view. What we're thinking through is that's the shiny thing up top. We're trying to think about how to improve the infrastructure underneath. That at the end of the day, what he's building is the user experience, how a user touches their money. We're thinking about how money actually moves. And what's the interaction between different entities, different nodes on a network to move money. And for us, it's about a more seamless experience and easier for developers to build on. It's fundamental. And on the topic of AI, how that would actually complement the next generation of compute that's going to happen. And in something that is true today with blockchain-based finance, that's not true in regular finance, is that regular finance, a bunch of wire transactions that you click on a screen and somebody on the other side retyping that in their own system.
Yeah. This I can relate
money
to because we deal with these problems and it's very true, right? Like money moves very easily within Singapore, I think, because you have Pay Now and you have Fast and it's amazing. It's like the future. But once you go international, it's like, okay, please give me the SWIFT code for this bank. And I don't really know what to do with this. Yeah. And it's true, like to the same logic, it hits the user experience, right? Because you're like, this is great. I want to invest. I don't know the wire code, right? And if money moved much easier globally, I think like everybody's life would be much better.
And so to me, this is where the blockchain piece becomes really interesting because now it's an interoperable, borderless network. And how do we move money, whether it's digital dollars or in the future, tokenized assets that sits on a blockchain and the interaction of those? That's going to be on the chain. And more importantly, there are smart contracts that will then allow you to program this money to do certain things. And you can imagine the possibilities that this has for like trade financing. You have an oil tanker that's moving across the ocean. A lot of that right now is financed through complicated insurance, bill of landing, all of the stuff that you got to do. You can track with the GPS, it moves across the ocean. And then the smart contract can say, if it moves 20%, you pay me 10%. If it moves 40%, you give me 20%. And you can also do all of this money movement at micro levels. It doesn't have to be thousands of dollars. You can even, the cost of moving tokens on a network is the same whether you're doing 5 million or $5. And that brings down the cost of transactions significantly because it's a technology cost as opposed to a value cost, which is how most of finance work today.
Fair.
I would look at it from a different lens. So across financial services, the product shelf they have is not ready for the society which we have today. So Singapore, for example, just yesterday, Singapore is the first country in the world to pass a regulation that your Grab, Gojek, Deliveroo, Foodpanda drivers will mandatory get an insurance and mandatory get CPF. United States, every state is fighting a separate war with all of these platforms on that thing. Singapore took a view from that perspective. Will that increase your cost of transit? Yes, absolutely. The money has to come from somewhere. But if you look at holistically, most of the product shelf still doesn't exist. If you're a white collar worker, you have employee benefits. Your company will give you insurance. But if you're self-employed, that product doesn't exist. The society is facing 3 problems at the same time. You're going to live longer. Inflation is going to eat away your retirement pool. And your healthcare is going to be more expensive. So you're going to be living longer, poorer.
This sounds great.
And that's the end of today's panel.
Yeah.
Thank you.
No, so for me, the way I look at it is it's a great opportunity. Your fund managers have to think about how do you create withdrawal plans, the products where you can set up, and whether it's through smart contracts or through physical contracts, that how there are systems, how AI can calculate based on whatever is happening on macroeconomics. This is what your earning was this month. Let's take out this much for your thing. Or if your earning is less this month, we can pull back from your retirement fund to ensure that you have a stable income. Today, you do not have a single company with all of this technology which has an income stabilization product for a self-employed person. So your income is different every month and some expenses are fixed, some are variable. Why can't technology solve that? And of course, you need to figure out different regulatory products. Those are building blocks. But can you have a way that I can be guaranteed something to save for my present and future?
That's interesting.
No product for that.
Yeah. So that's your next startup.
Maybe.
Yeah, take a break.
No, but think of it. Singapore has 3 million working people, of which 340,000 are self-employed people. On an average of 2 or 3 dependents, you're looking at 1/3 of our resident population being fully cut out of this market, of somebody caring for that. Even salaried employees have no way to plan for this. And CPF is great. It's fantastic. But you have to look at beyond, and there are a population which doesn't have it. And this is just Singapore. Go rest of ASEAN. How many markets have a CPF equivalent? So if you look at this population where the fertility rates are declining, cost of living is going up, and the lifespan is going up, you need to have wealth solutions. You need to have insurance solutions. You need to have pension solutions to handle for that economy. And that product shelf is, when you ask what's future. For me, here are like the real business problems. The product all exists because ultimately what you would need, those building blocks are there. How do you structure a nice experience? Where do you use AI for that? How do you structure in a way that smaller companies, bigger companies can go after niche segments? So the way I look at it is this post-COVID, when workers are working overseas, they don't have a domicile. There's no solutions for those non-domicile workers. So society has evolved so much in last 5 years. The broader financial services industry's product shelf hasn't kept pace with it, which is why like all these technology components are all fine, but they're not solving the real social problems.
True.
And I gave you like 3-4 examples. There is not even a single product which solves that. So that is real value.
I want to kind of unpack that a little bit as an old school finance guy. And that would normally be like an annuity product where you have essentially defined benefits instead of defined contribution. And I think part of the tension we've had over the last decade and a half, and probably in part due to amazing podcasts like The Financial Coconut.
Thank you.
Is that tension of you as an individual can make better decision than the financial institution. And there was a pretty large push away in the last 20 years away from the annuities and the defined benefits into defined contribution, where you set what you want to invest in and then you come up with like what you believe is the best return. And I think that's part of the gap that we face today, is that we're, if anything, spending more times trying to figure out how to manage our money because we believe that we have a better answer than a set program like an annuity. And again, like these are all choices. I don't know if one is better than another, but it does place a lot more burden on us as individuals.
Also, the historical annuity products were based on like fixed incomes that you are contributing the fixed amount every month. Now, when you look at the more employment, because historically people did not have 9-to-5 jobs and 5-day a week. The whole industrial revolution got people to the 5-day week, 40-hour work days. Now, a larger and larger population, if you look at last 50 years, the percentage of people who are in non-traditional jobs is highest because they're going away from the traditional. They're working for 3-4 companies at the same time and stuff. That part has changed. So which is why your products needs to become dynamic. The constructs needs to become dynamic from that perspective, because what was right for the industrial revolution generation, not all of it may apply. Some of it will absolutely apply, but there's a next generation of products which is needed to solve for that.
Hey, welcome to the Financial Coconut Podcast Network. I'm your host, Reggie, aka your Chief Financial Coconut. And if you're loving what we're creating here, like, share, subscribe, share with your loved ones, comment in the comment section below. And yeah, we'll see you for great content on Chills with TFC.
Yeah, fair. So I want to push a little bit on the insurance side of things, right? Because I second what you just said, that the products have not kept up with what is happening, right? And there's a frontier of insurance products that it's trying to tie it to your biomarkers. So trying to measure you as an individual and then pricing the premium based on actually how healthy are you? From there, de-risk the product, right? So what is your take on that?
It's not too different from like when you buy a car insurance, you have a no claim bonus, right? If you drive and you have no claims in the last 2 years, so insurance is risk pooling. So if there are people who are having a good behavior or good lifestyle, it's good to incentivize them to remain healthy, or the other ones to become healthier from that perspective. So yes, it can be done through all those apps with those trackers and everything. It can be done through measuring health screening or biomarkers. It can also be done through genetic testing, because genetic testing also can be preventive. So if, for example, my genetic test says that based on my last 3 generations, I'm more likely to have certain things once I cross 50, and I should take some supplements ahead of time and do some exercises to reduce, cannot eliminate, but reduce. This is absolutely normal. And the premise is that is one thing where incentives are fully aligned. The insurance company doesn't want you to be sick or die. And an insurance company is assuming that you would want to have a healthier, longer life. So both sides' incentives are aligned, and the technology can enable it. It's fantastic. Everybody wins.
Yeah. Why is nobody doing it here?
It's already happening. So I'll give you an example, right? In my day job, we worked with, for example, a screening company where we did a cancer screening program. Whatever are your results, if you follow a 6-month program to reduce your cancer biomarkers, 50% of your health screening cost will be refunded back to you.
Nice.
So the people are doing that. The premise is there is a thin line, because it sometimes freaks out the customers also.
Yeah.
What if I have certain results in an adverse manner and then my premium goes up? So you see, people are looking for only a downwards revision.
Of course, right?
So you see, the tension becomes from that perspective.
Fair.
And also then there are a lot of these AI challenges which come, right? Are you using technology? So if I'm saying I'm incentivizing good behavior, any affirmative action could be seen as discrimination to someone else. We will say, it's not my fault. So I'll give you an example, right? So obesity is never 100% genetics, is never 100% lifestyle. For different people, it would be a mix of both. 30-70 or 70-30 could change, but there is a mix of both. And people will say, because of this reason, you're discriminating against. And genetics is actually worse, because suddenly if you do a reverse control and certain race gets profiled on certain, they say it's discrimination. So then you freak out the provider. They're like, dude, I don't want to get into that debate. So which is why it is done at a small scale from that perspective where it's a clear way where you can do a time-boxed pilot to incentivize good behavior is easy. You want to roll it out? Marcus, for example, you gave example of calling Marcus from that. Marcus got sued by people that they were giving lower credit limit to women because they were just looking at historical income data. Person was just looking at, and there's nobody will disagree if you look at last 50 year, not today, 50-year economic data, the income of males was slightly probably more than females. And that's why there is income disparity data and everything. And the credit limit was based on decided by income. So which is why a lot of times financial institutions are also in this crosshair situation. Damned if you do, damned if you don't.
Fair. So long story short, it sounds like a lot of these tools, these offerings, they can roll already.
Absolutely.
Right. It's just whether or not it is the right time, and
it's
all
the
that.
right balance. It's the right balance. You can do it and you start to structure so for example, dementia is a problem in Singapore now. So now people are waking up to the fact that certain genes have a certain direct correlation to dementia. So then the moment there is more awareness to people, you can say like, dude, it's not to discriminate. There is clinically proven evidence that certain genes have a slightly larger proportion to cause this. And you can have the more awareness is there. And of course, you need awareness on one side and guardrails on the other side, because some people will try to misuse it from a pricing perspective also. So you need awareness and regulations to go hand in hand to make it work.
Okay, fair. So in other words, you can always talk to your providers. They have a lot of interesting things out there. And you never know what you don't know, right? But from your point of view, just now you were talking about how you guys are building a layer, right? Essentially. And then it's quite a developer play in that sense, right? It's a lot of the big US tech firms, they all have this. You build a layer and then you welcome a whole bunch of ecosystem people to kind of build on top so that you can derive innovation in a faster fashion. You can see more things develop. You kind of align everyone's incentive rather than have them run it on their own, right? So are there certain interesting products that you're seeing that, people should kind of be aware of?
Well, a ton. I mean, in the blockchain space, every other day is a new project.
Every other day is a dead project.
That's true. Every other day is a dead project. But that's also innovation.
Yeah,
right? That not everything is going to be successful. For many of us who came from maybe perhaps US, but certainly large technology companies, we try to think at platform levels, especially at Google. I mean, the idea here is, how do you solve a problem for billions plus people? The assumption is that you do not have the best talent within your firm. You do not always have the best technology within your firm. And therefore, hone in on what you're good at and build on these open platforms, whether that's open source or in our case, on permissionless blockchains like Ethereum, Avalanche, Polygon, Solana, and be one of the primitives on these networks, and then work with ecosystem partners who are building the ecosystem on these various chains. With some of the projects that are out there, obviously the most well-known ones are certainly crypto exchanges and various DeFi lending. But we're also speaking with companies that are doing trade financing based here in Singapore, where they are working with traders that are buying commodities from Latin America, from Africa, and the sellers or the buyers are somewhere here in Asia. So they finance that using USDC. And the trader here may not have all the cash up front. They put up some of it, and then the financing firm essentially raises money using USDC, use that to buy the commodity as it moves across the ocean. And then when it delivers, they'll collect from the buyer in cash and then pay back the loans, all of that in USDC. So that's like some really interesting projects. Others are, we're working with gaming companies who are, Krafton is one based in Korea. They are building games not just in Korea, but really around the world. And challenges for gaming companies is that their studio is in one place, but their market is really global. So how do they take payments around the world? And B, as they're building the next generation of games where you have creators introducing things into the platform, how do you reward them for that? How do you pay them for that? And they're using our wallets, Web3 wallets, to enable that infrastructure to be able to do pay in and pay out. So those are some, to me, amazing projects, and they're really transforming the next economy that's going to be built on this new rail.
So why don't they use TradFi stuff? Why do they use your stuff?
The reason is that the traditional finance has A, moved really slow, and B, it's burdened by...
Edward has a lot to say. Look at him.
Yeah. They deal with it every day. And they're burdened by, unfortunately, some due to their own doing, but others of not their own doing, but imposed upon them. And they are tied with their hands behind their back to do certain new things. And even like I speak with a lot of developers and project managers within banks, they want to build on Web3, but they are constrained perhaps by their regulator or by certain risk management parts. So I think they want to, but they just can't given the constraint that they're in. So what tends to happen is that newer companies that are building new economies will then pick up on the new primitives and then build on those.
Okay, fair. So shout out to MAS. Stay relevant.
It's a microtransactions issue also because there is a fixed cost of AML KYC in the TradeFi. So the cost of doing a world check is same for a $1 transaction and a $50 transaction.
Yeah.
So the challenge with the micro gaming ones you mentioned is microtransactions. The pain in the traditional world if, for example, Web3 world has to do the same level of AML, KYC, CFT check and world check for every sender and buyer for every transaction, the economics will start to change.
No, I disagree with that because I think on the Web3 side, the way the rules are structured is actually on where the on-ramp and off-ramp happen. So where an exchange touches a customer or a customer interacts with the payment system. And there are KYCs that are there. And then movement between entities are between trusted entities that are passing information back and forth. I mean, some of this is written in FATF under the travel rule. So the rules are there and firms that adhere to the regulation definitely follows it. I would disagree with the sentiment that in the Web3 side, there's no AML KYC checks. I would say that it's there. I do believe, however, that traditional financial services company are burdened by probably antiquated systems. And they're sitting on a lot of tech debt and it's harder for them to transition out. And the way that they're structured is that they can only deal with entities they can directly KYC, or they're dependent on another financial institution. And then there's a question of how do they manage that? In the Web3 side, because of transparency provided on a blockchain where you can actually see the wallets, what they do and the transactions they have, is actually much easier to address some of these concerns than in traditional finance.
Okay, this one very cheap, huh? Okay. I get a general sense of it, but for our audience, if you want to put in the comment section, you let us know. But on your front, what democratizing private wealth is really taking very complicated private wealth products and pushing it down to more people, right? That's as simple as it goes, right? So like, why? Because all these private wealth products, they are really complicated and they may not perform better than a market. So like for us, how do we think about it as a retail individual?
I think the way to think about it is if they're complicated, they don't have to be so complicated and they're not all created equal. And so I think I totally agree with you.
Sometimes I look at the offerings like,
yeah,
what are you trying to sell
why?
me? Yeah,
and why are you selling me this, right? And I think it's actually, that moment is actually what we're trying to get away from. I think to what these guys have said, like a lot of times the incentives aren't aligned correctly, right? Like you have an RM, they're incentivized to push something at you. They probably make something on the other side for even selling it to you. Removing a lot of that stuff and making the incentives aligned changes a lot of the calculus. The other thing is, I think what a lot of people do is build very complicated structures for the sake of building very complicated structures, right? Like options and derivatives and all these kind of structured products and all this stuff don't actually need to be so complicated. At the end of the day, like if you could build something very simple, which is some principal protection by giving up some upside, a lot of these things actually could resonate with like everybody else, where we don't have to think about all these very, very complicated things.
So is the mechanics being simplified or is the delivery of the idea being simplified?
I think both actually. Yeah, I think both can be simplified a lot. The other thing about this is there actually are a lot of like financial products that are locked away behind like private banks that don't need to be. They only are. You have a lot of that are like venture capital funds, right? Or private equity funds or private credit funds. All of these things, if you can open them up to a much larger audience, actually at the end of the day, it is good for everyone. You have very, very sophisticated investors that have their portfolios divided across ETFs and single stocks, but also a lot of these private funds that most of us mere mortals don't get access to. And so I think being able to let everybody kind of participate in this is at the end of the day, like a good thing.
Okay, but have access doesn't mean you got to access it. Huh?
Yeah, exactly. You don't have to, right?
Yeah. It's we got to be real about this, right? Because I think for a lot of our audience, if you're there, you can play around, right? There are interesting things, but this is not financial advice, huh? Okay, so don't just take everything on the surface. Okay, so I want to open up the floor to the audience, but before that, one last question about AI, right? So AI is the talk of the town. I want to dig a little bit deeper into this like bifurcating world where information is kind of like run in its own kind of ecosystem, and you see like US, China kind of like breaking up in some ways, right? So we don't need to elevate the discussion all the way to that point, but the baseline is information is not free flowing all the time, right? And the AI is kind of trained on these kind of open information. And so how do I know that it's giving me the best in class idea if the database itself is not clean and not targeted?
I actually think at the end of the day, you shouldn't blindly trust. I think actually like with each step in like a new technology, you got to learn how we as humans interact with it, right? Whether it's the mobile phone, internet showing up, social media, all this stuff is things that it's very cool. There's a lot of stuff you can do with it, but we have to learn how we should use it. I think AI is totally one of those things, right? Where I think you could definitely type questions into ChatGPT and get incorrect answers out.
Weird answers.
Yeah, we definitely shouldn't be training ourselves to just like read all of it, right? Actually, I did a very funny one this morning where I was like, please write a limerick of Taylor Swift lyrics. Please write a limerick using the names of Taylor Swift songs. The fourth one wasn't really a Taylor Swift song, right? And so if I just...
And Ed knows.
And I know, right? Like that, I was like, the fourth one is not a Taylor Swift song.
Swifty.
Yeah, you have to be able to. I was doing it because inside the app we need testing stuff. So I was like, I'm going to use ChatGPT to make one. But I think we shouldn't just trust what comes out of an LLM because that's not what it's programmed to do. That's actually not what the point of an LLM is.
I think that ultimately it's about the human interaction with technology. And every now and then we go through, we're lucky, these step change functions of what technology can do for us. And during that step change, there's usually a lot of hype with some disappointment and then some adjustment. And my wife was talking about in her work, she works in the Singapore government, and someone was suggesting, oh, what about this from the ChatGPT bot that they have? And they were taking it just blindly on what the response was. And I said, it is not too dissimilar from when search engines and especially Google first came about. And there was a lot of conversation around just because Google gave you that answer doesn't mean it's the right one. And same with social media. And I think we're going through that learning process as a society as we adopt AI.
Okay, fair.
The way we look at AI is there are a lot of the use cases where cloud providers have an incentive to package and show you a version of AI which is right for them. So
I love his candor.
So a large part of AI doesn't need to be real time. A lot of times, for example, let's say your financial portfolio analysis. Your portfolio does not drastically change every minute from that perspective, and you should not be taking big decisions based on 1 minute movement. It can be analyzed overnight. You can have the update as of last night updated, and that can be run. So we actually ran a test to run the same Llama 2 model on an A1 processor and an A100 processor. One of them's cost is 2% of the other one. The difference was 183 seconds versus 9 seconds to process the thing. But all the cloud providers for their revenue and their multiples of for a $2 trillion NVIDIA, everybody needs to sell you that. But they're not realizing that 80% use cases are non-real time. 80% use cases are small language model use cases. They're not large language model use cases. If you're looking at, let's say, a financial services app, there are no more than 5,000 keywords on which the whole financial lingo will be built on. There are no more than 200 tickers you are dealing with in your whole portfolio. If you have more than 200 tickers of stocks in your portfolio, you have a bigger problem than AI.
Yeah, you better be an index.
So, which is why the small language model and running them on traditional processors for 80-90% use cases will get you 95% output. But that is not aligned to what the sell-side analyst, what the noise in the market needs to do. So just because you have an automatic gun doesn't mean you have to shoot at everything. And the amount of wastage. So this is akin to what happened in 1999, 2000. A lot of those solutions were like, okay, the .com will do everything. Everything will be internet. Everything will be internet. It wasn't that. A lot of things became internet enabled. It took time for a lot of other things to happen from that perspective. There is a reason why pets.com's equivalent version took 15, 20 years. There is a reason why like those hip fans and everything, the food delivery ones, because the rest of technology wasn't there and a lot of stuff had to follow. So this is a gold cycle where everybody is trying to dump the processors and the cloud computes at the boom cycle. In 2-3 years, you will have obscene amount of excess capacity left over. And then industry will take another 5 to 15 years. What happened in the Cisco world will happen in the NVIDIA world. And that is where the AI is there. So a lot of slower players will actually win big because they're not enamored by the most shiny toy.
Fair. So from a retail investor standpoint, don't just stick to the provider that just keep throwing you AI, right? So I got a new AI, I got a new thing. Right? Ultimately, it's about what you want, right? What you need. Okay, great. So any last things to close it off?
If you were to believe in a fintech and what a fintech is trying to do, I think at the end of the day, you have to believe that if you apply a specific set of technology or computer science in a specific way, the economics of the business can change. Right. And so, for instance, if money movements are very, very manual and done by a large team, and you have to like basically have that team somewhere, and if that can change to something like a blockchain, then the economics of the business change. And that theoretically should pass on to like your customers, right?
Theoretically.
Yeah. If you also have to believe that the fintech you're thinking about would do that, right? Like they may not, right? And they may do what Varun is saying and say, you know what, I'm just going to become another one of the incumbents and just like beef up my margins. But maybe what I'm saying is, I think most people that are in fintech are a bit idealistic, right? And I think maybe idealistic in a good way. Like we want to basically apply all these really, really cool new ways of doing things and make life easier for a lot of people. Otherwise, to be honest, I think there are always much easier ways of making money, right? This is one of the hardest ways to make money. And so like we would just choose another path if that wasn't the case.
Great. So in closing, be a proud discount hunter. Huh? Don't be disturbed by all the flash at the top. Can we give the panel a round of applause? Thank you. Thank you.